What is up, everybody? It's Stas here. Welcome back to another video. So today we're going to be going over GameStop stock, why the heck the stock went from $17 under 2 weeks ago to over $500 2 days ago. I want to go over the short squeeze, what a short squeeze is, everything going on between institutional money, the big boys, the mainstream media, and Wall Street bets, the little guys, the retail investors. I want to talk about everything in this video, break it down very simply for you guys, so even a beginner, somebody that has no idea about anything, so even somebody like that can understand fully what is going on. So if you guys find value, hit the like button, subscribe to the channel, make sure to go down below, get into the Discord chat, the Facebook group, get 4 stocks from WeBull and $30 from M1 Finance. All of those are free and again linked right down below in the description box. So right here, what you guys can see is GameStop, ticker symbol GME, and like I said, this stock went from $17 back on the 11th of January to over $500 in the pre-market session on January 28th. That's 17 calendar days, and this stock went up God knows how much, thousands of percent. In fact, it went up even more than that because earlier it was just a $3 stock a couple months ago back in, the beginning towards the middle of 2020. And the way that this happened, this massive spike in the stock, it wasn't due to anything fundamental. It wasn't because GameStop is selling more systems, more games, they're expanding, they're doing e-commerce, they're trying to transition their business. It has nothing to do with that. It has nothing to do with the fundamentals. In fact, this company is dying. It's a company that the fundamentals, to be brutally honest, they absolutely suck. That is why Wall Street has been pushing the stock's price for years. Ever since 2013 all the way up to 2020, the stock ended up going from $63 all the way down to $3 in that 6-7 year span. And the way that people can make money in the stock market, there's 2 different ways. Actually, there's a lot of ways, but mainly there's you buy and hold and hope for the stock to go up. That means you're going long. That's what most people do, and that's what most beginners understand, right? You buy a stock and you hold it, and the stock goes up. But what the big boys did, the institutional money, what they did with GameStop is they go short. They went short, meaning they make money when the stock goes down. And the way that you do this is you actually borrow shares at a price, right? Let's say, for example, they borrowed shares at GameStop for $60 when the stock was at $60 in 2014. They borrow these shares and they immediately sell them back to the market, right? That's what they do. That's how they start a short position. They buy the stock, borrowed money from the brokerage, and then they sell it right back to the market. And remember, they borrowed these shares, so they're still on the hook for these shares. They owe these shares to the brokerage, and the way that they make money is, again, the stock goes down, right? So let's say they bought in at 60, they sold it back, and they ended up buying back the shares at $5, right? Let's say, for example, and they returned those $5 shares to the brokerage, and that's how they made money. They made the spread, they made the difference between that $60 and the $5. That's pretty much how the big institutional money made money here on GameStop for the past couple of years. And the fact is, the truth is, they got way too greedy. They actually shorted more shares than there are out there, right? They shorted 100. The short interest was what, like 140%, 138%, meaning they're shorting even more shares than there are in existence, right? Which is just I think that's illegal. I think it's called like naked short selling. Is that illegal? I mean, gosh, guys, that is just crazy. So that's what they did. They got way too greedy. And then what happened here is Wall Street Bets came along. And the way that mainstream media paints Wall Street Bets, they think they're a bunch of just retail investors, YOLOers, people that don't give a crap. They just bet on just random spec stocks. But the truth is, they just played the hedge funds. They're very smart, these Wall Street Bets guys. Sure, there's some people in there that maybe aren't intelligent, but to call all of them not intelligent, that's just stupid, because they just played the hedge funds. What Wall Street Bets did is they saw, okay, this GameStop stock, this has a very high short interest. There's a lot of people shorting the stock. Let's just hop into the stock, buy a bunch, get an army of people to just buy and hold on to these shares so the price goes up. And then ultimately, these short sellers, the big institutional money, they have to cover their position. Remember, when a short covers their position, when they close out, let's say they want to lock in profits or cut losses, what they have to do is they buy the stock back and give it to the lender. They give it to the broker, right? So they were pretty much forced into buying the stock back because they had to stop the bleeding, because all of these Wall Street Bets guys, a lot of retail money, they came in droves in big numbers. They bought up GameStop shares and the stock kept going up. It kept going up. It kept going up. And remember, if you're shorting a stock, you're making money when it goes down, and when it goes up, you could actually lose infinite amount of money. There's no bottom to how much you could lose. You could be on the hook forever. So you have to, cover your short eventually by buying back your shares and returning them to the lender. And that's exactly what ended up happening, right? Wall Street Bets, retailers pushed the stock up, and then these big institutions that were just shorting the crap out of it, they were being extremely greedy. They had to cover because they were losing so much money. So there was a lot of buying pressure from Wall Street Bets. Then we saw the coverage from all the shorts, them covering, which pushed the stock up even higher. And there's a lot of options involved there with options trading. That's a bit too complicated. I'm not sure you guys, if you're a beginner, will understand that. But there's just so much pressure to the upside now. And they're just covering their butts. They're trying to sell, cover their shorts. And that's what we're seeing. That's causing this massive pop in GameStop. And we're also seeing kind of a revolution, the little guy versus the big guy, being, Wall Street Bets, retail investors versus the big institutional money. And it's funny because we're seeing what's going on now with Robinhood, with Interactive brokerage, whatever the heck it's called, a bunch of other brokerages as well. They're blocking you from buying GameStop, from buying all these other stocks. It's not just GameStop. There's other ones like AMC, Nokia, BlackBerry. Notice how it's all these companies that are failing business models and they're over-shorted. And Wall Street Bets, the retail guys, they think, okay, we can just buy heavily into these heavily shorted stocks and ultimately squeeze out the hedge funds. And that's kind of, the strategy here. And again, Robinhood is bailing them out. They're blocking the buying of these shares. But the funny thing is, they're allowing you to sell the shares. Isn't that convenient? Isn't that crazy? And let me explain why that's crazy. Because if they allow you to buy, this could push up the stock up a lot higher. In fact, they're allowing you to buy, but it's very limited quantities. For GameStop right now, Robinhood, you can only buy one share. What a joke, right? But again, you can sell whatever, which is crazy. And if they allowed you to buy, that would squeeze the stock's price a lot higher, of course. And if they allow you to sell, which they are allowing you to sell, and you do sell, this is very beneficial to the big boys, the hedge hedge funds, because if you're selling, the stock goes down, and they want the stock to go down so they can cover their shorts at a lower price so they're not losing a ton of money. This is pretty much saving the big boys' butts, and it's not the right thing in my opinion. The free market, it's no longer a free market. I can guarantee you, well, I don't want to guarantee you, but if they did not stop the buying of these stocks, who knows? GameStop could be over $1,000. And that's pretty crazy to say, but at this point, it could be. It really could be. And again, this is just the battle between big boys, the small guys, and it's also, I don't want to get off topic here, but it's also making a pretty nice bull case for cryptocurrency, which is why Bitcoin has soared from like $30,000 now. I think it's like $35,000 in these past couple of days, as we've seen all this market manipulation on Robinhood, what the big boys are doing. There's a lot of manipulation. So the decentralized currency Bitcoin, it's going up a ton. So that is pretty much what is going on. That is what's causing this massive, massive move. It's pretty much the shorts getting out of their short position by buying back their stock to give it back to their lender, right? Because they must give that stock back because it's not their money. They borrowed it, and they're just doing this in droves. They're buying back, and it's squeezing the stock higher and higher and higher. And at this point, I believe the short interest on GameStop is still 120%, 130%. So this could continue into next week. It very well could. And based on the technicals here on GameStop, I mean, it's still holding an uptrend. As crazy as that sounds, guys, it is still holding an uptrend here at a higher low on this hourly chart, right around that not the 180 SMA, the 50 SMA. And in fact, we're in this wedge. So I think we could go higher. I think we could squeeze up, especially if the floodgates open next week. Let's say they don't have restrictions on these stocks. I think we could go a lot higher. And that's kind of a beginner's breakdown of what the heck is going on right now. And it's crazy. And to add one more thing, it's like the mainstream is holding, or it's losing its grasp of the of the retail investors, of the average Joe, because it's the internet. That's what it is. The internet is the great equalizer, and let's just say we're living in historic times. So that is what's going on. Let me know your thoughts down below in the comments. I would love to know. And if you guys enjoyed the video, hit the like button. Maybe subscribe to the channel. Hey, maybe you want some free money. You can get 4 stocks from WeBull. Those are linked down below, valued up to $1,600. And maybe you could also get $30 from M1 Finance. If only I could talk, guys. $30 from M1 Finance. That's also linked down below. Same with the Discord chat and the Facebook group. Gosh, I can't talk today, guys. But yeah, all of those are free. Linked down below. Make sure to get in there. I'll catch you all in the next video. Thanks for watching. As always, guys, stay safe out there. Keep crushing the markets. Peace out.